Thank you very much. Now I want to bring in the founder of Michael Lee Strategies, Michael Lee. And Michael, just your thoughts on that. Here's the thing. Yesterday, around 2:15, the market turned around and it really went big time, right? Because President Biden, even though he was laying out sanctions, listen, he remained pretty adamant that it wasn't going to be tough, never be tough, and not even going after oil. And yet there's this persistent battle against American producers, even challenging them yesterday not to raise their prices.
Charles, when your politics run up against reality and hit a wall is what we're seeing right now. Jen Psaki said it the other day, our agenda is going to come at a cost or something along those lines. Yeah, it's absolutely coming at a cost. And this former President Trump said it best, energy is power, right? And the reason why you can't move stronger against Russia right now to prevent them is because all of Europe is dependent on their natural gas for heat. Yeah. So what are you really going to do to them to stop them from taking over Ukraine? Yeah.
I mean, that part, listen, I'm just saying I don't understand why the war here on American fossil fuels in the name of climate change when we know that it can put us in a predicament to need more Russian oil. It's put Germany in a bind out of this world, and now they can't take actions to stop the movement of someone everyone agrees is a threat to the entire globe. Let's switch to the markets for a moment because obviously they look a lot better, but still under the surface in pretty awful shape. I want the audience to know yesterday at the close, only 50 stocks on the New York Stock Exchange and NASDAQ were at new highs. 2,132 were at new lows. But when I see this, Michael, I get a little excited. Do you think opportunity or pending doom?
Look, I think we're in a bit of no man's land right now, and I think inflation and the Fed is a key driver, and other things like Russia and Ukraine are more in our face, but you're definitely seeing multiple compression all over the place. There's a lot of economic uncertainty, and there's more uncertainty as to what the capital markets from a liquidity standpoint are going to look like,
right.
And that makes it really hard to make convincing bets on where the market's going to go, whether it be lower or higher.
So with that in mind, then, are you buying anything, or are you just sitting on cash right now?
No, absolutely buying. I'm overweight staples, overweight energy. Still own some tech, but I think energy is the safest play right here for what we just talked about. You have like a kind of irrational liberalism forcing this unnecessary pain on America to push oil prices higher, and as a result, you have a massive supply-demand imbalance. You just had it up on the screen. Goldman saying just on supply, oil could go to $125 a barrel. You also have contango in the futures curve, and what that means is people are willing to pay for the physical up front more than the futures contract, which is like a clear, in-your-face indication of supply constraints.
Yeah.
So there's a lot of reasons why oil can go up and why contango can happen, but if the bull case for oil is supply constraints, and you're seeing the contango right in front of you. You have the XLE, which is paying you almost a 4% dividend. You have Chevron and Texon, Chevron and ExxonMobil, the two largest holdings, both paying 4% dividends, mid-teens multiples with the wind at their sails. So it's a really easy way in kind of an uncertain time to know that you're probably going to make some good money.
Yeah, and I should point out, Staples looking pretty good today. Procter & Gamble up huge. Michael, thank you so much. Always appreciate it.
Thanks, Charles.
So as a member